Okay, period one, personal finance, personal financial literacy. This is your first homework YouTube video. Now, let me warn you in advance that this video is actually going to be kind of long. Remember, I told you that I'll cut the video off after. I won't make the video longer than 30 minutes. This lesson is going to be way longer than 30 minutes because there's a lot of videos and other content involved. So here's what I'm going to do. I'm going to record this entire video in like one long uninterrupted video, and then I'm going to cut it into part 1, part 2, part 3. I don't know how many parts it's going to be. Hopefully it's not too long of a video. Your homework assignment will only be one of those parts. So I'm not going to make, if this is like an hour-long video or an hour and a half, I'm not going to make you watch all of that for homework. You only have to watch the first 30 minutes, and then afterwards, the next homework assignment will be the next, however many minutes of it, and we'll go like that. Okay, so unit 1, checking. We did a mini unit before when we played the bean game, talking about budgeting, but now we are talking about checking, and the lesson is called the essential checking account. We're going to discuss your checking account, reasons why you might want a checking account. If you don't have one, we'll discuss some of the details about it. So the first part, again, this is just the video. We will discuss this in class. So your discussion will be, do you have a checking account? And then the second part of that question will be why or why not. So be prepared in class that I will be asking you these questions and you're going to be responding. Okay, so the first part, do you have a checking account? Second part, why or why not? I will ask that in class next time. And now this is going to be probably more of an involved question. I will be calling on some of you to make sure you actually watch this video, thought about it a little bit, so you can answer this. So what do you think are some of the advantages and disadvantages of having a checking account? So that will be the second question I ask once again in class. So now for homework, I just want you to think about these answers, and then in class we're going to go ahead and discuss that. So here's going to be the first video. The first video is going to be a part of step 2. Why should we use a bank, and 5 reasons why you need a checking account. So the first part of this is to watch this video, which is going to play right now.
Welcome to Ask Cash, where we go on the streets and talk to everyday people about financial questions that mean the most to them. You have questions, I have answers. Ask Cash.
How can I get out of debt?
Is this a good time to buy a house?
What's a good credit score?
What's a 401k?
Yo, who's Dow Jones?
Good morning, Ask Cash. I have a question. Why should we even use a bank?
All right, so a couple of reasons why you should use a bank. The first thing is because of security. If you keep your money home and God forbid something happens, somebody breaks in, fire, whatever it is, you lose that money. When you put your money in a bank, you're what's called FDIC insured, which stands for Federal Deposit Insurance Corporation, and it's insured up to $250,000. The second thing is that it gives you structure. It helps you learn how to budget. It puts all of your spending in one place. So if you have cash, you can't really create a budget by having cash all over the place. So the best reason to have a bank is for security and structure, but it also saves you money as well. If you don't have a bank account and you get paid, you have to go to a check cashing place. The check cashing place is going to charge you to take your own money. Most banks offer free checking accounts, so might as well just go in there, open an account, learn how to manage it so you won't have any overdraft fees, but it's safer. Make sure you do that. I am Ash Cash. Thanks for the questions. Tune in next time for Ask Cash.
Make sure you check us out, www.askashcash.com. Follow me on Twitter, twitter.com/IamAshCash. If you have any questions, hit us up, questions@askashcash.com.
All right, back from the video, let's move on. So the second part, remember step 2 says, why should we use a bank, and 5 reasons why you need a checking account. Right now, we're going to do the second part of that. So we're about to read the article titled 5 Reasons Why You Need a Checking Account. You're going to follow along. You can read along with me. If you're just listening, make sure you're paying attention because you're going to need this information. Don't forget, this is on YouTube. Just rewind it and listen to it again if you missed something. So, 5 reasons why you need a checking account by Barbara Davidson, posted on February 23rd, 2017. The information at the bottom will show that it comes from the Net Credit blog. 5 reasons why you need a checking account. There are an estimated 24.5 million people in the United States who are underbanked. While the biggest reason for avoiding banks is the fear of not having enough money to open an account, 57.4%, an additional 10.9% report that they simply did not trust banks or believe the fees were far too high, 9.4%. Unfortunately, one poor personal experience or secondhand story of a negative bank relationship can lead some to dislike the banking system and avoid it altogether. However, there are several advantages to having a checking account with a bank. From safety to convenience and financial planning, each advantage can ultimately help you get your personal finances in order. Read on for the top 5 reasons that a checking account can benefit you. Reason number 1, safety and protection. Even in a so-called safe place, storing cash at home poses several risks, from robberies to fires to natural disasters. Consumer bank accounts at federally insured institutions, on the other hand, are subject to protection thanks to the FDIC's standard deposit insurance, which covers up to $250,000 per person per bank for each account ownership category. Since the creation of the Federal Deposit Insurance Corporation, FDIC, consumers have enjoyed the security offered by FDIC insurance and the knowledge that their deposits are safe up to the FDIC coverage limit. For example, if you have $300,000 in one bank account, then only the $250,000 is insured. If for some reason the bank loses all of the money, the federal government will only cover the first $250,000. You will have lost that extra $50,000 unless it was at another bank. Number 2, convenient and free check cashing. Without a bank account, cashing your paycheck can be a complex process. Banks only cash checks for non-customers when the check is issued by that specific bank, which means having to go to one of that bank's branches. Plus, many banks often charge a cashing fee when cashing checks for non-customers. While other check cashing services do exist, there's often a flat or percentage fee involved. If you need to deposit checks frequently, or even 1 to 2 per month, these fees can quickly add up. By opening an account with a bank, you can avoid these costs and even set up direct deposit through your employer to avoid the physical process altogether, saving you both time and money. Number 3, convenient and free bill pay. From rent utility to cell phone payments, monthly bills are a fact of modern life. Paying those bills without a bank account involves money orders or physically delivering dues in cash, both of which can be a chore, not to mention expensive. With a bank account, you can write checks. Better yet, many businesses allow for automated bill pay, which makes it easy to pay on time every month without fault. Some banks allow you to set up auto pay through their online dashboard, or you can set it up through your service provider's website. Number 4, debit card convenience. Carrying a debit card lets you avoid carrying around large sums of cash, and many banking institutions offer protection in case your card is lost or stolen. Plus, it's not only safer, it's also convenient to pay with debit. In addition, many banks now offer check cards within the MasterCard or Visa network for checking account holders. These check cards allow individuals to use those cards wherever MasterCard or Visa is accepted, much like a regular credit card. Number 5, budgeting tools. Withdrawals and purchases are automatically tracked on bank accounts, and you can receive a report of your spending accounts via a monthly statement. This is an excellent way to see where your money goes each month, and from there you can fine-tune your personal budgeting habits. Plus, new online banking systems make it even easier to see and organize purchase history from your desktop or mobile device. While it is true that less than perfect credit can make it more difficult to open a checking account, it is not necessarily impossible. From starting with a savings account to considering credit unions, there are several steps you can take to increase your chances of getting a checking account with bad credit. So, with that being said, now that we have watched the video and now that we have together read through that article, step 2 for why should we use a bank and 5 reasons why you need a checking account, answer this potential test question. Potentially. Explain why it's so important to take advantage of the FDIC insurance offered by almost all banks. That's up to you to explain. And it might, maybe, who knows, it might appear on a future test. So I would pay attention to answering that question carefully. Once you're done with that test question, we have another one, or potential test question. We don't know if it's going to be on a test, but it might. The second question: one might argue that a checking account is essential because it enables you to manage the rest of your financial life. Give some examples of how checking is useful in the realms of saving, budgeting, and or other financial tasks. I will read that one again. One might argue that a checking account is essential because it enables you to manage the rest of your financial life. Give some examples of how checking is useful in the realms of saving, budgeting, and or other financial tasks. You're going to want to answer that question as well. Step 3, spent looking for change. You may be wondering, what are some of the disadvantages if you do not have a checking account? Watch this short segment from 9 minutes and 8 seconds to 12 minutes and 47 seconds of a much longer documentary to learn what some of the challenges are. Then you're going to answer a question which I will ask after the video. So here's the video.
Every year, over 30 million Americans use check cashers, and for many of them, the service works.
They're open later, they remember my name. They're offering a, we can get you what you need right now kind of solution.
A huge amount of business gets done at check cashers because people can get their money right away, and they need their money right away.
We've all had to wait a couple of days for a check to clear. It's because when a bank clears a check, it has to be scanned, verified, and processed by a system that was built in the era of rotary phones. Most Western nations have found faster ways to clear our funds, but not the US. So Americans have to wait.
3 to 5 days from now isn't acceptable for tens of millions of Americans. If your light's gonna go out tomorrow, you need to be able to have that clear now.
I'm not exactly sure when it's gonna clear, and I have to pay my bills. You go to the check casher, you get the money back minus the fee, You have that money in your hands right at that moment.
It's not an irrational choice. It's just not a productive choice, and it's a costly choice.
Underserved Americans spend the same percent of their income on fees and interest as the typical American family spends on groceries. That amounts to $89 billion a year.
And you are all set.
As a way to avoid fees, Alex and Melissa decided to live on cash.
We have cash on hand, and that's the money that we have. This is all we can spend. So when the money runs out, that's it. On payday, it's getting to the places so I can get the bills paid on time. Hi, how are you? Good. I'm here to pay the power. Thanks so much.
Take care, not a problem. Have a good one.
Being unbanked is really something like having a part-time job.
I probably spend a quarter tank to half tank gas, driving around and paying bills.
You're going to spend more money and more time doing things that people who are in the banking system take for granted and usually do for free. You go to a check casher, you are automatically having to pay somebody to get your money. Now you want to pay a bill. Well, you have a wad of cash. How are you going to pay your bill?
How you doing? I just need to put some money on this card.
Money is becoming more and more digital, which means there are less places that accept cash. That makes life for the underserved even more expensive.
We have prepaid debit card, and the money that's on the card is real cash. It's cash that I directly hand the people, and they turn it into fake money for me. It's convenient, you know, if you don't have a bank account, you can still do everything everybody else does, but you get taxed.
Justin not only pays a fee turning his checks into cash and his cash into a card, he pays a fee for every purchase he makes.
There's the transaction, and there's a buck, and the transaction, and a buck, and a buck, all the way down the board, man, it just kills you. Very quickly, you can lose 80 bucks a month cashing your checks and another 100 bucks a month spending your money.
Over the course of his career, Justin could spend up to $40,000 just to turn his paychecks into cash, and another $30,000 using his card.
And that's just not how you get ahead. It's not how you think about the future.
Back from the video, let's go on and answer the question. This potential could be, might be, may be on a test. Potential test question: what are some of the disadvantages of being locked out of or choosing not to belong to the traditional banking system? One more time, what are some of the disadvantages of being locked out of or choosing not to belong to the traditional banking system? You will be answering that question. Step 4, make deposits and withdrawals. And how does a checking account work? Review these 2 slides on how to deposit, put money into, and withdraw, take money out, with your checking accounts. These slides are provided by Next Gen Personal Finance, the creators of this course. So, ways to deposit money into your accounts, called a credit. Number 1, at a bank branch. Number 2, through an ATM. Number 3, direct deposit from your employer. Number 4, electronic transfer from another account. Number 5, mobile app deposit. And number 6, a third-party app, for example, person-to-person payments. Ways to withdraw money from your account, called a debit. Number 1, at a bank branch. Number 2, through an ATM. Number 3, use a debit card to make a purchase in person or online. Number 4, write a check. Number 5, electronic transfer out to another account. Number 6, online bill pay. 7, mobile app withdrawal or payments. And 8, a third-party app, for example, person-to-person payments. So again, we are discussing making deposits and withdrawals, and also how does a checking account work. So you're going to have 2 questions after this video. So you're going to watch this video first, and then we'll go on to those questions. So here is the video.
Welcome to Ask Ash Cash, where we go on the streets and talk to everyday people about financial questions that mean the most to them. You have questions, I have answers. Ask Ash Cash.
How can I get out of debt?
Is this a good time to buy a house?
What's a good credit score?
What's a 401k?
Yo, who's Dow Jones?
Hey, Ash Cash, I have a question. How does a checking account work?
All right, pretty simple question. How does a checking account work? With many banks out there, a checking account is what you'll use to conduct your transactions. You'll get an account. You'll usually get a debit card that has a Visa or MasterCard logo. And anytime you want to buy groceries or buy anything from the store, you'll use that card and the money comes directly from the account. You also can use that card in the ATM machine to take cash out. Remember, it's not a credit card, so you can't take more than you have in the account. But that's the simplest way that a checking account works. Thanks for the questions. I am Ash Cash. Make sure you tune in next time for Ask Ash Cash. Make sure you check us out, www.askashcash.com. Follow me on Twitter, twitter.com/IamAshCash. If you have any questions, hit us up, questions@askashcash.com.
All right, back from the video, let's move on to the questions. Again, potentially might see this later on a test, on a quiz somewhere in the future. So you might want to pay attention to these questions. The first question, what 2 methods of depositing and withdrawing money are most convenient for you and why? So depositing, 2 methods of depositing money that are most convenient for you and why, and 2 methods of withdrawing money that are most convenient for you and why. And the second question, this should be an easier one for you to answer. It should be simple. You should be able to answer this one in class. What is the main difference between a debit card and a credit card? Again, that's a question you will want to be able to answer on paper.